respected stalwarts in the industry of the guys, dear colleagues, friends, and all the people present here, ladies and gentlemen. Good morning to all of you. First of all, let me thank Indian Chemical News. Let me thank Indian Chemical News for giving me this opportunity, and it's an honor and privilege for me and BPCL to make a presentation here. And I would also like to congratulate Indian Chemical News for bringing initiating such a forum. Such forums do bring in all the industry people out here in a common forum and express their concern and deliberate on the ways forward. Now you got to excuse me during the presentation. There are certain things which are common. The source of data is common, so I try and skip those areas. So let me start with the current scenario. I think Bharat has already spoken about the Indian petrochemicals market. Here I will be concentrating more on petrochemicals and specialty chemicals because of the experience we have had in entry into the petrochemicals market. Before starting on BPCL, Maharatna ranked to the president in the Fortune 500 list has made entry into the petrochemicals, although in a small way. We are at 1% petrochemical intensity index, expected to touch about 8 to 10% by the end of the decade. With large investments in Bina, Kochi again, and possibly Bombay also. So here I would like to, already this has been spoken about, we are only about 13 kg per capita, but a major factor which is going to affect, help India become a sort of Atmanirbhar or reduce the dependence on imports is going to be the changing global scenario. With the China plus one policy being adopted by many of the MNCs and the global players, India is actually it's got all the capabilities of becoming a global destination for a manufacture of chemicals, which is expected. Today we are at 3 to 4% of the world chemical output, which is expected to go to as high as 10 to 12% of the global market by the end of 2040. So Papneja was already talking about 10 to 14 world scale cracker capacities, but how these have to be configured is the challenge in front of us. And another thing which is there is the pressure on fossil fuel usage. So it is said by the International Energy Agency that almost the growth in oil demand by 2040, 2050 is going to be met. 50% is going to be met by petrochemicals market, petrochemical segment. Now, where are we today? USA capacity additions are happening, ethane, crackers, shale gas, which is going to put a pressure on ethane in the longer term. Definitely, ethane is going to become costlier. It is also said that naphtha, which is a typical feedstock for the petrochemicals sector, anything above $70 the crude oil price, it's again going to create a pressure and reduce the economies. So that's how USA's the polymer market is going to basically stabilize over a period of time is going to dictate, and is going to be another major factor where India as a global manufacturing hub can pitch in to meet the demand globally. As a peninsula, we are situated very, very ideally in the global scale, both on the Southeast Asia and this side, and the Europe and the Africas on the other side. Europe has almost stagnated, not much of additions coming in, lot of environmental pressures. Markets are the competitiveness is going down because of huge wage structure. China, yes, it had shown development in the last couple of decades, but then again, it is now, the news is that China is trying to import some things from developing countries like India. Of course, they are also developing, but then they are also looking to source some petrochemicals from India, which is actually very, very encouraging news for our country. So the major developments or the major additional capacity additions are going to come in the Asia and the Middle East. Now, where are we? Are we very bad? I don't think so. I have sourced this from the McKinsey report. Almost all the areas, we have got the capability, we have got the potential, and everything is there right, excepting a couple of areas. Yes, we are short in the ethane, the C2, C3 chains. That is where our competitiveness, the way we are going to structure ourselves to be competitive, is going to play a major role. The other place is the R&D. Technology, it's prohibitively expensive, especially in the specialty and the niche petrochemical market. Then land acquisition, when we come to the further slides, we'll be discussing a little bit of the challenges we face with respect to the land, the infrastructure, etc. Otherwise, government is pushing. There is a lot of push being given to give faster, speedier environmental clearances, which was a challenge once upon a time. Ease of doing business. India's now going up globally in the global ranking, getting moving further up. Otherwise, you talk about the wage rates or the cost of material, etc. We are pretty competitive. Now, what exactly can promote a very, very viable cluster or a structure of an ecosystem? The first is an anchor company. Now here, most of the anchor companies are concentrated on the West Coast, because there has been a lot of development on the West Coast, large developments in the Gujarat belt. Dahej PCPAR is one of the very big success stories of the PCPARs. Logistic networks. The other day, we were talking to a couple of, and I was of course visiting a couple of hubs in the US also. Logistics, East Coast, not as developed as West. There's a lot of opportunity there. But rail network, how long can we sustain with moving, even if we have a manufacturing location in the coast, consumption location in the hinterland in the country? How long can we sustain with 20 KL or 20 tons or 24 tons, 24 KL trucks? This is where we are lacking, the rail network. I have seen, this has been an opinion from quite a lot of experts whom I have interacted with also. The rail network in the US or the Europe, it's pretty phenomenal. We were very surprised to learn that one of the major polymer producing companies in the US have not envisaged a truck movement, 100% rail movement. That is where we are getting throttled quite a lot in the rail network, because there is an economies of movement. The cost of logistics is going to play a major role in the economics of consumption within the hinterlands of the country. Policies, yes, there are a lot of developments which are taking place. Infrastructure. We cannot survive, or no standalone plant can be economical if we are not able to source the utilities like nitrogen or hydrogen or synthesis gas. There are a lot of materials which are required for producing niche or specialty petrochemicals. Here, sort of a plug and play concept in which, operator who sets up facilities for industrial gases such as nitrogen, oxygen, or the hydrogen, the synthesis gas, or even for specialty chemicals, gases like phosgene, which is not very safe to transport, which will really help. We had a small experience in trying to, BPCL commissioned the propylene derivatives petrochemical plant, which has started producing acrylic acid, acrylates, and oxo alcohols in the country, one of the first in the country. So we tried to promote a small industrial park close to our premises. The first challenge was infrastructure, cost of land. There were people ready to invest in the country, but then again, the consumption centers were away from the southern part of India where Kochi refinery of BPCL is located. That was a challenge. We were not very successful. The ownership structure was also a challenge there. Who will be the main promoter, the co-promoter, whether any infrastructure provider is going to come in. So these are the things which are going to actually really affect how an ecosystem can make the manufacture of chemicals and petrochemicals pretty economic. I was just analyzing out of the 4 PCPARs we have today, and the 5th one coming up in Barmer, thanks to HRRL. I think it is on track. Hopefully it is also successful. The major factors, if you see 450 odd square kilometers of PCPAR and Dahej, the real development has taken in an area of about 17 to 18 square kilometers, which is mainly in the SEZ region. Of course, this is considering even the existing infrastructure which was already present. So in spite of that, one success story, we can say, part success story, we can say is the Dahej belt, Dahej PCPIR. Orissa, Paradeep, thanks to Paradeep's IOC's Paradeep refinery, hopefully it takes off. But then there are certain challenges with the plastic parks and the textile parks. Again, prohibitive cost of the land. Of course, now I think there has been some easing of the costs. But finally, a sort of all the factors, ecosystem which has got infrastructure, a good anchor, a good logistic. Logistic finally, as I was mentioning before also, is going to play a major role. I'm skipping these slides because already the source of data being common. But here, one thing which I would like to highlight here is the cost of capital. Now here a lot of incentives and a lot of new innovative financing aspects such as project bonds, which are long-term bonds and then a fixed rate of interest will be really helpful. The government is getting into a lot of free trade agreements. We have also faced a lot of pressures on the economics of operation, especially we have got a very new industry which has had quite a lot of capital investment, whereas China and other countries in the Southeast Asia have got depreciated assets. Here is where the most important aspect of tariff protection comes. For after factoring a depreciation and interest cost, the petrochemical industry, which is either have been set up in the recent past or which is going to come in, is going to face challenges. Here, we require a very clear tariff protection, which we are taking up through various agencies like CPM, etc., and trying to get, if not additional dumping duty, might be protection in the terms of import duties. This is one slide which is really was appealing to me. We got about 20 billion deficit in specialty chemicals and about 40 billion import-export deficit in petrochemicals. This is where we have got quite a large potential to reach the target of about 370 billion by the end of 2040. There are challenges. The challenges mainly are technology. Technology is very costly. That coupled with the price of land, the logistic cost is not going to make any manufacturing facility viable. Here we've got some suggestions. Lot of R&D efforts need to be put in. It is happening, but here a lot of collaboration would need to be made with the petrochemical players within the country, the PSUs, the private sector, whether they can share or share their technology, whatever has been developed. Instead of everybody developing the same technology, why not have a common forum where we can distribute what technology is to be developed by which organization, and it can be put to mutual use. This is one thing which could go a long way in promoting technology development in the country, and then enhance self-sufficiency in both technology as well as manufacturing of chemicals. And here, till now we were, sort of modeling industries, the cracker gives out some output, ethylene, propylene, and then some industries developing downstream of that. Can we have a reverse approach? Find out what is the deficit of chemicals and try to structure crackers or the petrochemical plants in such a way that, we reduce our dependence on imports and also increase the exports. So some sort of a reverse sort of an engineering would need to be done here. Yes, we'll have to see there's definitely the question of viability, the economics there, but there are instances in which we have defined the products. These are the products which are available, try to develop. So what I was trying to say is, try to sort of plan PCPIRs or industries in the PCPIR regions or the SEZs in such a way that find out the deficit and then tailor make it accordingly. Now, a couple of way ahead, whatever I mentioned, there are a lot of possibility for putting multi-feed crackers. As I was mentioning just a little while ago, try to find out the deficit of products and then plan ahead. Cluster approach is another concept which is Sanjay ji was talking about. Port of Houston and Antwerp, Jurong, Jubail, all industries. China is another classic example. All industries are clustered. There's a lot of synergy between the industries. sharing of feedstock, sharing of common materials. In fact, common line, hydrogen line running from one corner to another of the plant. CO2 capture. They're pooling. US, Houston is developing a CO2 capture line. Now, all the industries will pool the CO2 and then there will be a centralized CO2 capture. This is going to put pressure on the industry in future. A common CO2 lines carrier so that it can be captured and, whether it's sequestration, whatever may be the way to do it. So these are the things, sort of will help quite a lot when we are setting up synergistic industries in a cluster manner. Anchor, of course, anchor, somebody should be anchor, should be a co-promoter, that is going to be very critical, but the anchor should also be able to provide the feedstocks which is required for developing the required industries, the identified industries. That is a sort of anchor who should be chosen. The PPP model, as I was mentioning a little while ago, the plug and play model, both involving with either the private sector or the public-private partnership should go a long way, especially the infrastructure for transport logistics. Regulatory framework, it is easing. Quite a lot of easing has happened. Government is also pushing towards that. But there should be some sort of incentives for the specialty, the niche products which the country needs desperately. That's all. Thank you very much once again.